Good morning, students. After discussing about the different types of dividend policies and different types of dividends, we will discuss what are the factors which are affecting a dividend policy. Basically, there are 16 factors. Number one is type of industry, number two is ownership structure, number three is age of the company, number four is expectation of the shareholders, number five is leverage, next is future financial requirement, next is business cycles, then government policies, then profitability, then taxation policy, then trends of the profits, then next is liquidity, next is legal rules or legality, next is inflation, next is control objectives, the last one is repayment of debt. So we will discuss one by one how they will affect a dividend policy. So the first one is a type of industry. The nature of the industry to which company belongs has an important impact on dividend policy. Industries where earnings are stable may adopt a consistent dividend policy as opposed to the industries where earnings are uncertain or uneven. They are better off in having a conservative approach to the dividend payout. The next one is ownership structure. The ownership structure of the company also impact the policy of the company for the dividend. A company which with a higher promoter holdings will prefer a low dividend payout, as paying out dividends may cause a decline in the value of the stocks, whereas a high institutional ownership will favor a high dividend payout, as it helps them to increase the control over the management. Next is age of the company. Newly formed companies will have to retain major part of their earnings for further growth and expansion. Thus, they have to follow a conservative policy, unlike established companies which can pay higher dividend for their reserves. Next is expectations of shareholders. Another factor that impacts policy in is the diversity in the type of shareholders of a company has. A different group of shareholders will have a different expectations. A retired person, widow, or weaker section may prefer a regular dividend, but on the other hand, other investors may prefer other type of dividend policy. The company needs to clear understand the different expectations and formulate a successful dividend policy. Psychologically, cash dividend will give more satisfaction to the shareholders in comparison to capital appreciation. The next point is leverage. A company having more leverage in their financial structure and consequently more interest payments may to decide for a low dividend payout so as to increase their net worth and to make sure that it can make payment of financial changes or charges even in case of earnings of the company is falling, where a company utilizing more of own financing will prefer higher dividends and vice versa. The next point is future financial requirements. Dividend payout will also depend on future requirements for the additional capital. A company having profitable investment opportunity is justified in retaining the earnings. However, a company with no capital requirement should opt for a higher dividend. Next is business cycles. How business cycle impact a dividend policy. When the company experiences a boom, it is prudent to save, because in prosperity we are having a higher profits. So we will try to save the money and make surplus or reserves for dips. Dips stands for basically recession, or we can say depression. Such reserves will help a company to maintain dividend even in depressing markets to retain and attract more shareholders. Next point is government policies, how government policy will impact the shareholders' dividend policy. So, there could be a change in dividend policy of a company due to changes by the government policy. The Indian government has put temporary restrictions on the company to pay dividend during 1974 and 1975. This is basically an example. In 1974 and 75, they make a restriction on payment of dividend. So basically, it is a systematic risk which is not in control of the company, because with the change of the government policies, we have to make a policy of the dividend or others. Next is profitability. The profitability of the company is reflected in net profit ratio and the ratio of profit to the total assets, as we have discussed in the last semester subject, that is accounting for management and reporting under ratio analysis. A highly profitable company has a capacity to pay higher dividends, and a company with less profits will adopt a conservative dividend policy. So, next point is a taxation policy. Again, that will make by the government taxation, because a tax department is under the government. So, the corporate taxes will affect dividend policy either directly or indirectly. The taxes directly reduce the residual earnings after the tax available for the shareholders. If dividend income is taxable in hands of investors and capital gain is exempted, then company may retain its earnings so as to increase the price per share, which ultimately give higher return to the investors, and vice versa. Further, if it is possible that bifurcate all the shareholders into high tax bracket or low tax bracket, accordingly dividend policy can be framed. Finally, objective is to give maximum return to the shareholders. The 11th point is a trend of profits. Even if the company has been profitable over the years, the trend should be properly analyzed to find the average earnings of the company. This average number should be studied in relation to the general economic conditions. This will help in opting for a conservative policy if a depression is approaching. Next is a liquidity. Liquidity has a direct relation with the dividend policy. Many a years or many a times, a company having high profits may have a majority of profit blocked in working capital, or it may acquire some assets. In that case, its liquidity is poor. In that case, a company should pay less dividend. High dividend payments is possible only if company has a good earning and sound liquidity position. Next is legal rules or legality. There are certain legal restrictions of the companies under the Companies Act 1956 and 2013 or Amendment 2015 for dividend payments. It is illegal to pay a dividend only if the capital is not reduced post payments. These rules are in place to protect creditors' interest. More importantly, providing depreciation is a mandatory before making payment of the dividend. Depreciation is to provide at a minimum rates provided. Providing depreciation is very important because that company is able to retain an amount of profit for replacement of fixed assets in future. Next point is inflation. Inflation is basically, we know that the price rise in price index So, how inflation impacts a dividend policy? Inflationary environment compel companies to retain major parts of their profits and indulge in lower dividends. As the prices rise, the company needs to increase their capital reserves for their purchase of fixed assets. In case of inflationary situation, some quantity of closing stock will have more valuation, so payment of tax also increases. Next is control objectives. The firm aiming for more control in hands of a current shareholders prefer a conservative dividend payout ratio. It is imperative to pay fewer dividend to retain more control and the earnings in the company. Last one is repayment of debt. If the substantial amount of debt is required to pay, in that case, even though the company has a high amount of earnings, it may pay less to the shareholders. So, we'll discuss the next topic in the next lecture, that is theories of a dividend policy. So, stay tuned on the same thing. Thank you.